Okay, welcome everybody. Welcome to Going Live with VectorVest. My name is Russell Markham, and it's a pleasure to have you along. I'll show you, there we are, I'm on camera. I should be hopefully popping up there on your screen. So great to have you along today. Let's go and show you how to make some money in the ASX, on the ASX for the Australia market. All right, so before we get going here, as always, please note our license numbers here. Please note, I cannot give you any personal financial advice. So any information that we share with you today or anything that we note there is for a general advice only nature. All right, and as always, past performance is no guarantee of future results, and past performance there. So just note that. And forecast, back tests used or discussed, intended as a guide only. All right, as long as we're all clear with that, let's get into it. Let's go and make some money in the market. So how do we make money in the markets using VectorVest? What we advocate here at VectorVest is we advocate timing the market. All right, we do not believe in time in the market. Sure, time in the market with certain assets can do incredibly well, but it's all about timing the market. If you get your market timing right, everything follows from there. So what we've got here is we've got the average of all the stocks, REITs, LICs, and ETFs that we track here in VectorVest for VectorVest Australia. So you can see over here, for example, we're tracking 2,034 stocks, which includes REITs, LICs, you name it, all in there. Okay, so using market timing, wouldn't it have been wise with the wisdom of hindsight to have avoided the market back here? All right, so if I put my date line on back here, we could have sort of stayed out of the market for late February 2025, or 25, and then got back in April of 2025, and then we might have jumped out just temporarily, jumped back in, and now it's flashing a down signal again. Doesn't that make life very clear when you look at that? You go, well, okay, yeah, that made sense. Well, not so much there, but oh yeah, that made sense there. What if I do this? What if I come into here and put on a slower signal here? Here we stay out, here we get in. All right, so here we stay out, here we get in. Well, what I'm going to do for the exercise today, I'm going to make it a little bit more detailed. I'm going to use a slightly faster timing signal, our DEW timing signal. All right, so I'm going to do a little bit of a test here. I'm going to see what happens here. I'm going to see what happens here, here, and then there. Let's see how it all stacks up. All right, so the way our DEW signal works is as follows. We have a detrended price oscillator. So when the oscillator oscillates above zero, and the average of all the stocks, LICs, REITs, and ETFs that we track, when that goes above the 30-day weighted moving average on price, all right, there we are, 30-day weighted moving average on price, we give it an entry signal, right? So this is one of the many powerful tools we offer in VectorVest to help you time the market. So what I'm going to do here, I'm going to go to the ASX 100. What if I were to buy all 100 stocks on the ASX 100, and let's say, just for argument's sake, I began here on the 24th of February, all right, and let's see if I held it all the way through until close of business yesterday. All right, so I'm going to do that in VectorVest. I'm going to go here, ASX 100, here they all are. So this is the ASX 100, and we'll go back to when we got that down signal. All right, so there it is. If we just scroll down a little bit here, 24th of February. All right, so I'll load it up for 24th of February, go back to the graph, just double check. Yep, 24 February. All right, so coming back to here, 24 February, what if I were to go and buy, so I'll test all 100. Here we go. Top 100, simply buy and hold. All right, so here we go. So here is the buy and hold. We bought it on the 24th of February. We held all the way through the top 100 at that time, and we averaged 5.85%. All right, so I bought and held, buy and hold, 5.85. The AXJO, which tracks the ASX 200, that did 5%. So pretty much neck on neck. Both did around about 5%. Okay. Let's go back. Let's use VectorVest now. So, all right, well, what I'll do here is I'll avoid where VectorVest gives me the down signal on the 24th of Feb 2025, and I'll wait until the signal flashes up for me to buy. Here we go. 29 April. So I come back to VectorVest. I go, all right, well, I'll look at the ASX 100. Here's a little twist. I'm not going to go and buy all 100. I mean, if I wanted to, so I could roll that forward until where the market turns around. All right, 29 April. So there we are. There's our signal, up signal, 29 April. All right, so coincides with that one there, 29 April. What if I were to go and buy the top 100 at that point? Now the market's turning. All right, so you can see the best performers right through to the worst performers. But you can see that, wow, look at that. I averaged 10.98%. So just effectively by being aware of market timing, if I just gone and bought there, the ASX 100, maybe I bought a 100 ASX market tracker, an ETF, for example, my performance doubled. I went from 5% having bought there to returning over just on 11% buying there. This doesn't take into account any franking credits and or dividends. Okay, so the returns would have been probably a bit higher than 10%. So just that alone gave you an extra 5%. All right, I'm going to throw in an extra twist here. What if we went in on the 29th of April and we say to VectorVest on the 29th of April on the ASX 100, give us the best combinations of fundamentals and technicals, and let's just buy in the top 5. And I'm going to do it for argument's sake here. The reason why I'm saying this is because I don't think anyone's going to rush in and buy all 100. All right, a lot of work, a lot of commissions, a lot of management of those stocks. I doubt many people would buy at all 100. All right, so what if we were to say, well, VectorVest, tell us the best combinations of fundamentals on the ASX 100 and bring them to the top of the list. And so VectorVest does that. We sort it by VST. This is the best combinations of fundamentals and technicals, and they're at the top of the list. Okay, so what I'm going to do here, what if I were to go and grab the top 5 as of 29 April? Grab the top 5, all right, and I bought the top 5 and I held it all the way through, in this particular case here, to 3 September. You know, why 3 September? Let's just come back to the graph here to show you why. This is the turning point, 29 April, and we go all the way there to 3 September. So from that period here to that period there, using the power of VectorVest, all right, quick testing the top 5, we did 12%. Not bad at all, right? Let me just go back. I just want to make certain I've got this right, because I think I might have got that wrong. 24th of February, I'm just going to go back here. So this is a buy and hold. If I bought it on 24 Feb, all right, and I just simply hold all the way through until current date, let's just double check what those returns were again. So I'm going to buy all right, so we buy all 100. Here we go. And I think I had it for 3 September, so I actually need to move it through until the current date. All right, there we are, till 4 November 2025, and run the test. All right, so I got it wrong by a percent. You got an extra percent, so 6.28. So that's just buy and hold, buying the top 100. You're getting 6.28. The AXJO, which tracks the ASX 200, did 6.08. So neither here nor there. You know, whether you use the benchmark as the ASX 200 equivalent, or whether you buy the top 100 and the ASX 100, you pretty much would have got the same return, 6%. And then what I did here is I said, let's use market timing. Let's use the powerful VectorVest tools at this point here. 29 April, let's go and buy the top 5 best stocks as sorted and ranked by VectorVest on the ASX 100. So that's what I did. 29 April, coming back to the ASX 100. I went to the 29th of April. Here we go. 29 April. Let's do this. Let's grab the top 5. So here I'm going to pick the top 5 best fundamental and technical stocks, and I'll run it through all the way through. If I just were to do a buy and hold at that point, look at that, 17% returns. Big difference, right? Using an entry point for when the market's turning. But in this particular case, let's continue on with the methodology. So if I buy from here and I sell here, all right, so that's 3 September, all right, so 29 April to 3 September. Let's go back and do it. So I'm going to use market timing, quick test the top 5. So here we go, 29 April, and we will go to, I think it was 3 September. Let's just double check. There we are, 3 September, and run the test. All right, so mark that number down, 12%. All right, 12%. So from here to here, we did 12%. We wait, we get the next signal. Here we go. Now, I think it's only a day after since we got the down signal, so I'll just run it through till the end. It's neither here nor there. So 5 September, let's go back. Here we go. We'll roll it forward. So remember, we've already got 12%. And then we go to 5 September on the entry. Let's do the same deal again. Let's pick up the top 5. And I think I just need to bring it back one day on the down signal came through yesterday. All right, so run the test. There we go. And look at that. So 12 and 9. It's 21% returns. So using market timing, we did 12% here. And then we did another 9. So over 20% returns by using market timing. If we came in here and we did a buy and hold, and let's say we weren't picking top fundamental technicals, we just picked up the ASX 100 and we just simply bought and held, we made 6%. All right, big difference. Here I waited longer to get in. I went from there to there, picked up 12%. I waited again, very short wait here, and I got back in and I made another 9% for over 20% returns. All right, conversely, if you did want to do a buy and hold strategy, which we don't advocate, then you were better off at that point there to wait when the market started to turn on the 29th of April. So coming back in for that methodology here, 29 April, and let's sort it by VST, best fundamentals, technicals. Let's go here, 29 April. All right, so here we go, 29 April. What if we were just to pick up the top 5 at that point? So here we're going to use market timing, but thereafter we're going to ignore market timing, which I don't advocate, but still it's better off than buying into a falling market. Here you're buying into a rising market. What if I were to pick up the top 5 fundamental and technical stocks on 29 April? All right, let's do the test. 29 April here, and we'll quick test the top 5 and run it through until close of business. Not bad, 18. Not as high as the 21%. But here we did 18%. So here we just had to simply get in once. And so we were picking up the top fundamental technical stocks at that point, and we made 18%. Big difference between making 6 versus 18. And that's what it's all about, using market timing. Now, if you can consistently be careful in a falling market, load up in a rising market, and avoid those falling markets, your returns will be significantly better than a lot of investors that adopt the buy and hold and hope type strategy. Sometimes it works out miraculously well. Don't get me wrong. Things like Bitcoin, a few other things like gold over the years, investors that accumulated, bought and held, there were some terrible pullbacks, but on average it worked out okay. It's not always going to be the case. All right, so you've got to be careful, and that's why we advocate at VectorVest that we don't, we're not a buy, hold, and hope. We believe in timing the market, not timing the market. And proof is in the pudding. I'll leave you with these. Trading system viewer here. Here are our trading systems. These use rules of when to buy, what to buy, and when to sell. And so, for example, if I take a look at this one here that's done 50% for the year so far, and I bring this over to show you, all right, there's the equity curve, and that goes all the way back to the GFC, 2007 and beyond. Look at that. And so when I look at the rules here, so we click on trading system rules, this tells me when am I going to buy? I'm using a timing signal. What am I going to do when that signal tells me it's time to go in? These are the type of stocks I'm going to buy. These are all the parameters. All right, what stop losses am I going to use? Am I just going to buy and hold and hope? No. If it goes to 30% gain, take the profits. If it loses 15%, sell out. Only buy back in when the timing signal kicks in. So we track all these each and every day. And so all you need to do as a subscriber is click on the trading system details. You know that these rules are being followed each and every day in these systems. They're for educational purposes only. And so I can scroll down, have a bit of a look. And then I can see, these are the current stocks being held. And so you can see some of the top performers up there and the ones that are starting to fall away. All right, this is not buy, hold, and hope. This is why a trading system like this has done an annualized return of 62% in recent times. This is why it has a low drawdown. If I were to take the exact same methodology on some of these trading systems and remove market timing altogether, I can assure you those returns would look terrible in comparison to what's being shown there now. All right, so coming back, this is what we do at VectorVest. We time the market. That was not a good time to be in the market. We waited. Things turned around. We got the signal. There was a good time to be in the market. Slight day or two pullback. And there was another good time to be in the market. What's interesting here now is that it's flashed up again for a down. Now, last time we got the down signal with our DEW timing signal, it was very short-lived. It was only like 2 or 3 days. And then off it went again. So, time will tell. Are we loading up for another rally, or is this going to be the bigger pullback? All right. Is it going to be this type of pullback? And so you can go back over time and you can look at VectorVest over the years. All right. It was a bit choppy leading up to that point there. All right. The timing signals in VectorVest are very powerful indeed. If you don't like all the noise, slow it down with our slow signal, confirmed signals here. There was the last really good signal good signal on the confirmed calls. That was our last one. Look, it was a really good one indeed. The market ran for a long time. There it is. Let's do one last thing before we sign off. 1 May. Let's go and have a look. If I go back to 1 May on the ASX 100, there was that turning point. All right, so 1 May. Let's do an experiment here. What if we were to buy the top 100? So quick test. 100 on. Now I've got to set this for 1 May. Okay. Now nobody's going to rush out and buy all 100. A lot of work, but nonetheless, let's just say you did. Let's put it in top 100. I'll just plug that number in. All right, and test it. Let's see what the top 100 did from 1 May. Here we are. I think we've seen that number today. 12%, right? 12%. Let's do this. This is a slightly different timing signal nonetheless. All right, so 1 May, the top 100 did 12%. Let's do the top 5 fundamental and technical per the rankings here. All right, here we go. Let's do this. And let's plug it in. Put 5. Here we go. And test the top 5. How does the top 5 stack up? In this particular case, you needed more diversification. Still did 6%. It's a slower signal, so it's not as aggressive. So the returns are not going to be necessarily as explosive. So when I look at that, I go, oh, okay, well, slower signal. Maybe I need more diversification. Maybe I need a few more stocks. And so you can come and test with VectorVest. So what if I were to grab, say, the top 10? All right, and I can then run the top 10, for example. All right, I think I've pushed it a bit hard here on the testing. This is the power of VectorVest. These are the tools that you have. If you want to take out a trial, see what you think with VectorVest. You can give it a go. Anyway, I hope you enjoyed the short presentation today. What I'll do here, I'm not sure what I've done. I've frozen my screen. I'm going to log in. So there we go. All right, so I was just going to re-kick it off, but no, it's fine. Sorry, I must have slowed something down on my system. 13%. All right, so this was the top 10 from that turning point. So there we are. And so I can work out a sweet spot. You know, where is the sweet spot? This is a slower signal. Maybe I need more diversification. There was the top 10. What if I were to go in and instead of doing the top 10, let's do the top 15. All right, so I'm going to run the top 15 now. That also did 13%. What if I were to do the top 20 and run the test again? So look at that. It looks like the sweet spot for the slowest signal has come in at 20 in this particular run. We did 18%. Buying the top 20 certainly a lot less stressful than buying the top 100. It's still a bit of work. I prefer the top 5 ideally. So if I want to do a lower work rate, well then it comes back down to here. What signal would work best for you? And in this particular case, the more aggressive signal, believe it or not, just 2 or 3 days difference. 2 or 3 days earlier makes all the difference. And there, 29 April. And so coming in here for 29 April, there we go, 29th, there's the signal, tying back to the graph here, 29 April, we'll go to the ASX 100, and now I will just do the top 5. All right, there we go, top 5. See how this one runs, and so you can get similar returns. So a more aggressive signal looks, in this particular case in recent times, means that I don't have to hold as many stocks. A slower signal looks like I might have to acquire a few more stocks to spread the diversification a bit wider. All right, I'm not saying what's right and what's wrong. You ultimately be the judge. You've got the tools now to make smart decisions. All right, so anyway, I hope that was of interest today. Thanks again for coming along. If you want to take a trial to VectorVest for 30 days, hop along to website vectorvest.com.au, and on there you can't miss it. There's a special link and you can trial out VectorVest for 30 days. See what you think. Hope you got a lot out of the short presentation, the power of market timing. Thanks again for coming along. I'll leave it there. Bye for now.